Hello, everybody. Thank you for joining us today. Our topic today is what hospitality businesses can do now to be better and stronger post-COVID-19. My name is Lee Schwartz. First of all, on behalf of SVA, we hope you're all healthy and staying safe. We have been doing our best to be a resource for the business community, and today's webinar is another way in which we're trying to communicate out the latest and greatest information available. Today's presentation will cover everything we know at this point in time. Please keep in mind this information is fluid and can change and has been changing very, very quickly. I also want to make it very clear. If you have questions coming out of this webinar today and you're an SVA client, please reach out to your SVA professional. We want to help. If you're not an SVA client, your best bet may be to go to your existing CPA. They probably know you best. But if that doesn't work, or if you're not getting questions answered, please feel free to reach out to me directly. We understand this is an incredibly difficult time for everybody. And if there's some guidance, advice, or even just a second opinion that'll help you in this process, we are happy to do it. The more we all help each other get through this thing, the better we'll all be on the other side. So our presenter today is Nikki Grollup. Nikki is a principal with SVA and specializes in working with clients in the hospitality industry. She's going to begin with tracking your PPP funds. She'll talk a little bit about cash flow planning, and then she's going to get into some specific industry-specific hotel and restaurant topics. We are going to leave time at the end for some Q&A, so please hang with us. In order to ask a question, just open up the chat function within Zoom and address your question to all panelists. I will ask, please hold off your questions till we've kind of made our way towards the end of a topic. I want to make sure that we don't have questions about specific items that we end up covering. With that out of the way, we are recording this webinar today. You will receive an email with a link to a survey, as well as our SVA resource page, where the webinar recording will eventually be made available. Having said that, I'd like to kick it off to Nikki.
Thanks, Lee, and thanks everybody for joining us today. We have a lot of information to cover, so let's jump in. And really, this whole presentation was made on what kind of questions are we getting? What kind of questions do people in the hospitality industry have? So, and there's lots of them. Trust me, you're not alone if you feel like you have a lot of questions and unknowns. So just a short while ago, just a month ago, or a little over a month ago, business was booming. We were operating like normal. We did know that there was some potential that in China there was an outbreak, but never did we think in such a short time we would go from operating to either we're closed or maybe we're operating on a different fashion than we ever have before. Likely a lesser fashion than we had before. So within this, I would just want to start out with, we need to think about who do we need to be communicating with. So communication with people is going to be greatly important at this time frame. We need to think about our employees. You know, they're all wondering what's going to happen. What's the plan for the business? And you've been doing a lot of business planning, so we need to make sure that we're communicating with our employees. What about our vendors? And what about our lenders? So oftentimes the hospitality industry, especially hotels in general, have a lot of debt that they're going to have troubles making some debt payments. So we need to be communicating with them. And the more we can communicate now, the more trust that we're going to have and the more loyalty we're going to have coming out of this. So I just want to start with just a little analogy of why are we talking about this? So right now we might be on the upper left-hand corner and we might have no business. We might be completely shut down, or we may have some business, but not as much as we anticipated. Sometime we're going to get to the right-hand corner. So we're going to be business back to usual. The question is, we don't know how long that's going to take. And the other question is, what is that middle period look like? And that's why we need to do so much planning, is because there's so many unknowns. A lot of times we look at to project what we're going to do about this time this year, we look at what we did last year. Well, now we can't. We really just have to throw that out the window, and we need to be very fluid in our expectations because they're going to change. because really nobody knows what to expect. So let's talk about PPP loans. So many of you, the payroll protection loans offered by the SBA. So many of you have either an approved SBA loan or a funded SBA loan. So we know that there's a couple steps. First, you apply, then you receive an approval, and then several days later, you'll receive funding. If you don't have a PPP loan, so maybe you put in your application, but the funds ran out, I would still recommend that you continue down that path, because there looks like some promising indications that that program will open up and there will be more funding for that program. So if you didn't get those funds and you need those funds, make sure that you continue getting your information ready. So for those businesses that have either approved funds or that have actual funded funds, we're recommending, if possible, that you put those funds in a separate bank account. So the reasoning for that is it's going to be a lot easier to track those funds, and when they're just segregated with your normal operating funds, it's going to be harder to track and make sure you're using them for the very specific right reasons. So when your loan is funded, then you're going to put that liability on the balance sheet. So you're going to record your cash deposit, and then you're going to record your liability on the balance sheet for that loan. Then you need to map out, how are you going to use these funds? So likely when you were doing your loan application, you were mapping that out. Just make sure your circumstances haven't changed. So we know that the Safer at Home order in Wisconsin has got extended specifically, and a lot of Safer at Home orders or other orders in other states have been extended as well. So we know that maybe that changes what our expectation was if we were just falling under the first Safer at Home order. So once we've done that then, and once we start using the funds, we really need to track how we're using those funds over the 8-week period. So we need to track our funds, our payroll paid by employee. So if you use a third-party payroll provider, I recommend that you talk to that payroll provider, because they're likely able to set up some specific codes for you in order to then get some really good reporting, which you'll need on the back end when you're trying to apply for forgiveness of these PPP loans. So then you also want to track the benefits paid to employees. So we know that health insurance and retirement costs are within that forgiveness calculation. Our state unemployment tax in Wisconsin, rent and utilities. So we know a portion of that can be used towards rent and utilities. So we should track that while we're paying it. And interest payments on our loans. So while we're tracking all this and while we're paying it, we should really make sure that we have the supporting documentation. We should start getting that information ready while we have it readily available. So when it comes time to apply for this forgiveness, then you'll have the information or the bulk of the information already pulled. So that supporting document includes payroll records, lease agreements, utility bills, and loan statements. So they're really coinciding with the amounts that we're tracking for the forgiveness purposes. And then we also should start gathering additional employee numbers, so FTEs. So we know that our forgiveness calculation is going to use FTEs for certain time frames, and we have a certain time to get back to our pre-COVID-19 FTEs. So here we've outlined the employee numbers that you should start working on. And while there are still some questions, what does that forgiveness calculation look like? And what information do you need? And there still is some open questions about that. So I want you to start pulling this information and knowing, hey, maybe you'll need a little more, but you'll definitely be set up for success. So let's jump into what should we be doing now in order to help get us through this COVID-19 shutdown or slowdown, and then what should we be doing after? So right now we should really be looking at, what does our cash flow look like? So oftentimes businesses look at this. I'm just recommending you're going to need to look at this more often than maybe you have in the past. So first, when we're looking at cash flow, we want to talk about, well, what are our expenses? So we know that we have two types of expenses. We have fixed costs and we have variable costs. So our fixed costs theoretically shouldn't change when we don't have any sales at all. And our variable costs should go away when we don't have any sales. If you're still operating just at a lesser capacity, then your variable expenses should reduce accordingly. So when looking at our fixed costs, we want to talk about there's some level of utilities that are fixed expense. But just looking at what is that fixed cost versus the variable cost. So for the hotels, for instance, hey, can we unplug the refrigerators in the rooms that we're not using? Can we unplug the TVs? So anything that's pulling our electricity that doesn't need to, and we're not utilizing them. Rent. So that's one of our biggest expenses, likely. So what does that look like? So typically rents, fixed. Otherwise, it might vary. There might be a variable piece based on sales. But have you talked to your landlord? Is there any negotiations? We know that the landlords are suffering as well because many businesses are going to struggle to pay rent. So really just to be in open communication to them on what's your business impact and what does it look like. Our loan payments, and mortgage and interest payments. So oftentimes our mortgage and interest is fixed during a certain period of time. But are you talking with the bank about, hey, can you make interest only payments? Otherwise, hey, is there any opportunity for an interest rate reduction? Some businesses have opportunity and some don't, depending on where you are at. License and franchise fees. So if there's a fixed element to that, be talking, hey, is this necessarily a fixed cost or is there any leeway here? And insurance costs. So by no stretch do we want to get rid of our insurance, but just making sure that we're at the right levels. Some of our variable costs that should really go away if we don't have any sales or be reduced dramatically are food, our labor. So this is kind of if you didn't get a PPP loan. If you did get a PPP loan, our labor might be higher based on our sales because the whole point of the loan is to keep those employees on staff. Along with that comes all the costs that associated with our people. Utilities, equipment, and supplies, so all the things that you need to run the business. And another example is your point of sale system. So when we talk about this, we need to really look at, well, what are our cash flows? So we need to take those expenses. We need to make sure that we're limiting our variable, our fixed is at the right level. And then we need to look on it. I'm recommending on a weekly basis as what are our cash flow needs. So oftentimes businesses have not done this necessarily on a weekly basis, but you're going to need to do that because of the uncertainty. So first we look at what are our cash inflows. So you might have cash and credit card sales right now, or you maybe don't have any sales at all. Proceeds from debt. So maybe you're going to draw on a line of credit in order to fund this. Proceeds from the PPP loans. So when your PPP loan is funded, you need to increase your cash flow because that's going to be used to offset your employee and rent and utilities over the next 8 weeks. Collections from accounts receivable. So if you had accounts receivable sitting out there and you collect on it, that's going to provide you additional cash flow. Advanced deposits and gift cards. I want to touch on those two items a little more. So our advanced deposits, if we're using those funds now, that's going to be a really great way to maybe help get us through this if we are getting some advanced deposits. And we'll start to get more as the outlook looks, we know when we're going to open up and the outlook is looking better. But we're probably going to utilize those advanced deposits before they're actually redeemed. So we're not necessarily going to have a matching of when the revenue is earned and when the expenses actually happen. So I want you to be thinking about that later when the expenses happen, that you've already used that revenue. Same with gift card sales. So I know that a lot of hospitality businesses are ramping up and trying to sell more gift cards to our loyal patrons. And that's the same thing. So that's going to provide us good cash flow to try to get through this. But when they go to redeem the gift card, we aren't going to have that matching. And sale of fixed assets. So maybe you had excess equipment that you decide that you don't need and there's a buyer, you might sell some equipment. Then we need to look at what are our cash outflows. So those include items such as our payroll expenses. So if we have a PPP loan, we know that we just increased our cash inflows for that PPP loan to offset our higher payroll expenses. Cancellation refunds. So this is a big one. This is a big one in the hospitality, convention business, weddings. There's a lot of cancellation refunds happening right now that are causing a big cash crunch. Advertising would be an example of a cash outflow, food costs, supplies, our utilities and our rent, our professional fees, insurance. And then we also need to think about so oftentimes when people look at cash flow, they'll look at their income statement and say, well, what does my bottom line income statement say? Well, we need to factor what's happening on our balance sheet too. So we're paying down debt maybe. And we need to factor that into this calculation. We might be paying down accounts payable. We also need to factor that into this calculation. And maybe we're purchasing some fixed assets. So now some businesses are looking at it while we're shut down as an opportunity, if they have cash available, to be able to do some of those projects. So we need to factor that all together to get to what does our cash flow look like on a weekly basis, and how long will our cash last? And then if we, on a weekly basis, we compare our actual to what we had projected, and then we determine if we're on or off track and what impact that's going to have. So while we're talking about cash flow, we've already had a couple webinars on the new acts that have happened that had some tax implications within them. But there might be some other opportunities to accelerate losses from COVID-19 into the 2019 tax return. So I just want to talk about that. So there is under tax code section 165I that does, it really covers disasters. So we know that into some specific disaster losses. So we know on March 13th of 2020, President Trump had essentially declared a disaster. So then that opens this up. So this tax code section deals a lot with natural disasters, but there could be some opportunity within here to take advantage of some write-offs and get some of your tax payments that you made in 2019 back sooner. So 2019 taxpayer has until 2021 to file this, and then the taxpayer has the burden to prove that the casualty was the cause of the 165 loss. So just showing the loss without showing that it caused it doesn't qualify. And then you must establish also that it was a directly related rather than indirect relation to the casualty. And then there's some other items that need to be true in order to take this casualty loss. So that includes compensation for the loss can't come from insurance or elsewhere. The loss must be caused by an identifiable event. So right now, the identifiable event needs to be COVID-19. It must be evidenced by a closed and completed transaction. So we know that the fair market value of some of our businesses may have gone down. Well, that doesn't qualify because it was not a completed or closed transaction. The losses sustained must be related to the disaster event in the year of the disaster. So the year 2020 we know is a disaster year. And the amount of the losses typically are basis in the asset less any amount potentially that you realize upon sale. So let's talk about what types of losses qualify. So if you just have a net operating loss, that's not going to qualify for that. So there's specific things that were done on those, which I'll just touch on briefly that we've already talked about. But closure costs to store and facility locations. So we might know, and we might start seeing more often that businesses are going to start shutting down locations or shutting down in general. So if that's directly related to your COVID-19 shutdown or slowdown, then that will qualify. Complete abandonment of leasehold improvements. So if you had some leaseholds or you were getting into a space or you're just going to get out of that space, that abandonment we can push back into the previous year. Disposal of inventory supplies or other property that is just unusable. You can't sell it anymore. for spoilage or other reasons. Now you must realize that that has to rise to a level that makes it worth it, because you'll have to amend your 2019 tax return and your individual returns if they're already done. Permanent abandonment of fixed assets. So if there are things that you were doing that required assets that aren't going to be feasible in the future, then that could potentially provide you a loss that you can put into 2019. Losses from sale or exchange of property. Cost of terminating business transactions that would have otherwise been capitalized. So if you were looking at doing some M&A work potentially or something along those lines, and you've canceled the transaction due to COVID-19, then potentially you have an opportunity. Payments made on terminating contracts, leases, or licenses. Prepaid events. So if you had travel, conference, rooms, significant amount that you didn't get refunded or a credit, those would potentially be an opportunity. And then worthless securities. So not bad debts does not qualify, but worthless securities would. And then I just want to talk about what does not qualify. So a decline in fair market value of property does not qualify. So we know that a lot of our properties have seen a decline in fair market value, but they're still usable, so that's not going to qualify. Lost revenues is not going to qualify, and it's going to be hard under 165 in order to take a goodwill loss, because careful consideration and documentation needs to go into that in order to take that goodwill loss. So then we can talk about how will the COVID-19 affect tax deductions. So the rules governing casualty losses may not apply because the losses are to operations rather than losses. So this rule that we just talked about has to do with casualty losses. And it's not new, it's been in the tax code. It's just more relevant, and not a lot of people are thinking about it. Maybe this does have an opportunity since we've been declared a disaster. But most of our losses that we're seeing, a lot of them have to do with operations rather than property. So if you own a building, it's not worthless. Maybe you can't use it right now, but we're certainly hoping that in the future it will be usable. So that's why that deduction would not qualify. And just because it didn't destroy our buildings doesn't mean it doesn't have a negative impact on our business operations. Significant impacts we're seeing right now. So the net operating losses are going to be definite. We're gonna see a lot of net operating losses for the year 2020. And we do have the opportunity now to carry those losses back and then also carry it forward. So while we can't push those losses into 2019, when we get to the 2020 year, hopefully if you have NOLs, hopefully you don't, but reality is there's going to be a significant amount of NOLs. Then if you're a pass-through entity, the individual could carry that back to help get additional cash flow that maybe they needed to put in the business, get that cash flow back. So for the restaurant industry, let's talk about what are things you could be doing during this downtime in order to set you up for the future. So oftentimes I'm talking to my clients about, hey, you need to do menu costing. And we all know that at some point you've done menu costing. We just know that we don't do it enough. So now's a really good opportunity to kind of sit down, put your pen to paper and do that. So it's really going to help you come out stronger on the back end if we do that now. So I'm sure you've done this, but let's just walk through the concept of doing your menu costing. So first you're gonna write out every single ingredient in a dish. So that goes down to your salt, that goes down to your jelly. And then you're going to determine the cost of each ingredient individually per serving. So let's say we have a ham and egg breakfast. So we're going to calculate what's the portion cost of that ham. We're going to do that for every single ingredient within the dish. And then we're just going to add all those costs up, and that gets us to what is our plate cost. So then the next thing we're going to do is we're going to divide the dish cost or our plate cost by the dish price to determine what is our cost, what is our food cost for each specific item. So let's assume the sales price is $10 and our cost is $3. Well, then we have a food cost of 30%. So oftentimes I get the question, well, is that the right number? And it really varies depending on what industry you are. So let's say if you're a pizza takeout versus if you're a high-end steak or seafood restaurant, though your margins don't look the same. So you really need to look and dig down into what should your margins be based on your specific business. But then we can calculate what's the maximum allowable food cost percentage that we want to get to. So this is a calculation. It's just a formula to determine. We take 100 minus our labor costs, so that we know that there's labor that goes into it. We know that we have overhead that we need to cover with our food sales. And then we want to make some profit on this, on our sales. So we divide those three items by the food costs and take it out of 100 to get to what's our maximum food cost. So in this example, our total sales, let's talk about an example. So our labor cost is $18,000 a month. Our monthly expenses are $10,000. Our profit goes $8,000 and our sales are $50,000. So then just running through the calculation, you take your 18, so your labor, plus your monthly, your overhead, plus your profit goal, and you divide it by your sales. So in this example, our maximum allowable food percentage cost is 28%. So then we know if we're over that we need to potentially adjust what we're doing. So how do we adjust? What are some things that we should be thinking about? Well, there's a lot of costs that we can control, and now's a good time to really look at it and say, are we controlling these to the best of our ability? So we often use seasonal ingredients in our dishes. So we know that those expenses can fluctuate greatly between in season, off season, and even from year to year or period to period. There's a lot of volatility in those seasonal ingredients. We can build relationships with multiple suppliers to make sure that we're getting the best quality for the best price. Also, our suppliers have some really good discounts and incentives that we should be taking advantage of. So if you're not getting those incentives, I really recommend that you talk to your suppliers because they're definitely out there. Define a reasonable portion size. So if you're seeing that your guests are trying to split plates a lot, or they're always leaving with large to-go containers, that might mean that the portion sizes are too large, and that might be an opportunity, if we can't raise the price, to reduce our costs. We need to train our staff. So our staff have the ability to control the food costs. They're really those people that they're cooking it, they're plating it. So they're the ones that really have the ability to control it, and you need them to control it. Implement inventory management. So oftentimes I'll be at a client and they get a shipment and they just sign for it and then they just start putting it away. They never actually look at what's the quality, what's the quantity within my shipment. Was something dropped off that's going to spoil here real soon, or I'm missing a couple bottles of wine that you might never even notice. So that can easily add up over the time period, and we're all human and we know that this has a lot of human components within it. So you always want to check and make sure that you're getting what you paid for. And then minimize spoilage and wasting. So we're often doing this, but it also makes sense of, hey, if we have items that are getting closer dated, should we look at maybe making a special to use those up? And are we making sure that we're using all parts of our inventory? So, we're trying to waste the least amount as possible. So I want to talk, so that's all stuff that we should be doing now to set ourselves up. And then once we get to the point where we think we have it all figured out, if you're not meeting the results, you might need to increase your prices. So if you're controlling your costs to the best of your ability, then you need to determine, do I need to increase my price? And sometimes restaurants haven't done price increases for quite some time. So now would be really the opportunity to look at it and say, should I be updating that menu? Oftentimes the reason why we don't update the menu is because of a time limitation. We're just busy. So now would be the really good time to look at that. And maybe, hey, do you need to pare down your menu? Do you need to offer new dishes? Now is a really good time to do that as well. So there's lots that we can be doing during this slower time or closed time to set ourselves up. So once we do open, you're going to be really successful. So now I just want to talk a little about our reality of where we are. In the hotel industry, we know that you're offering a lot of takeout. So some businesses haven't offered takeout at all. Some restaurants barely had any takeout business. Some restaurants thrive on takeout business. So those people are being really creative. Businesses are being really creative. So, you know, some restaurants, you know, you can get their food to go, but you can also maybe get some of their suppliers, some of their vendors. You might be able to get stuff directly from the restaurant as well. So they're kind of trying to be like a farm hub too for maybe some of those local businesses. So we know that we have an incredible increase in our to-go container costs. So my concern is, and as I've been, you know, eating out with my family as well, my concern is that your costs, the price that you're charging to your customers needs to increase, because you do have additional expenses that maybe you didn't have before, and the to-go containers is a big one, especially if you're not set up to put them all in one container. If you need multiple containers per meal, it can add up really quickly. So make sure that you're pricing your items appropriately. Otherwise, you're going through a lot of work and maybe not getting the results that you desire. So then look at the volatility and the costs and available items. So even, you know, personally going to the grocery store, we know that there's quite a bit of volatility in the items right now. We know that, you know, you see on the news that some pork producers are shutting down factories. You know, that's going to increase, or has the potential to increase, some of our costs, and we need to really pay attention to that to make sure that we're getting the results that we need. So we know we have some protective equipment that we need to keep our customers or employees safe. So we're going through gloves at a rapid pace. Maybe you're wearing masks. And then we know we have additional cleaning supplies. So to keep everything sanitary, we need to cover those costs via our takeout goods. We might have additional costs of delivery. So maybe you're doing the delivery yourself. Maybe you're doing the curbside pickup, or you might be doing all of this. Or maybe you're having a third-party delivery service. Some businesses are covering some of the costs of the third-party delivery service, but you need to make sure that that's embedded in your cost you're charging the customer. And then we have additional costs of online ordering. So some businesses weren't set up to take online orders, so they're quickly coming to that. So we need to make sure that we're thinking about those costs. So the whole concept here is we did this so fast. So all these restaurant businesses changed how they're operating so fast, which kudos to all of you. It's been amazing to watch what you're doing. But then I want you to just take a step back and look at, is it working how we wanted it to work? Are we open the right days? Are we charging the right amount? Because this is the way that you're going to get through this. And we know that we have another month, a little over another month of the Safer at Home. So we're going to, you know, at first it was like, hey, you know, can we get through a month of this? Now we're looking at a whole nother month. So take a step back and look at, does this all make sense? Now I just want to jump into the hotel industry, who has similar but different challenges. So the hotel industry is looking at some significant potential cash calls from owners and investors. So if the owner wants to reopen at some point, they might be facing the difficult decision that they might have to infuse cash into the business in order to get it through the slowdown. So for many business owners, for all business owners, your real asset is within your business. That's what you've worked so hard on. So to have this happen, you know, and have to put cash into it might be really unknown, and you might not have had to do that before. But the reality is that we're facing that on a business level and on an individual investor level as well. So you should be, if you haven't already, I'm sure you have been in negotiations with your lenders, and those will continue to happen. So maybe you got interest only for a certain period of time. Well, now we know the shutdown is going to be a bit longer, so maybe we need to extend that. So if we go way back to how we open this up, that communication piece is huge. And we know our lenders they want to know what our plan is. What are we going to do? How are we going to get through this? So I've had a lot of clients call and say, hey, can I use my FF&E reserves, my furniture, fixtures, and equipment reserves? Because I'm not going to use those. I don't foresee using those in the near future. So you really need to, in order to fund debt service or operating expenses, so you really need to, first off, the FF&E reserve, you might have requirements. You likely have requirements to have that reserve. So what do those requirements mean? And if you utilize those funds, are you going to be going against your loan document or some other document, maybe a franchise document? The other concern with utilizing those funds is once we come out of this post-pandemic, so once we come out of this COVID-19, business as usual, then we won't have the FF&E reserves to do a refresh. And it's going to be hard to replenish those quickly. But in reality, lenders do not want to become hotel owners. So make sure that you're in constant communication on how to make this work, what's going to make this work throughout the duration of this slowdown, shutdown, and until we get to, pre-COVID-19, once we get back to normal, which, could be some time. So the other thing we want to talk about is we're not just going to see floods of people coming back through. So we need to get to that middle period of, we have some clients, but we have more than we had maybe right now, but less than we normally would have. And we really need to control our business costs during that duration, because that's where we have the opportunity of losing some significant funds too, because we don't know what our staffing needs to be. We don't need to know how much food we need. So all of those we need to consider, because in reality, that's going to take a while before we get some consumer confidence back. So it really begs the question of, when does it make sense to reopen? So some businesses, some hospitality are under franchise agreements, which probably have some information in there on what they're required, when they're required to be open. So it's really looking at that and determining and talking with the franchise on, does it make sense for you to be open? When makes sense to open back up? So that's going to be the big question as we move towards, stabilizing and being able to open back up at a lesser level for some period of time. So we've covered a lot of information, a lot of different information, but it's really relevant topics on what we're seeing, what we're hearing right now here today. So some of this information will change. I had indicated, there might be more PPP funds. It might be replenished at some level. This stuff is so fluid and it's changing so often. I know a lot of people are wanting more information on the PPP loans. They've got funded and they feel really uneasy about the use of these funds and how they're forgiven. So the whole fact is that this information is changing so fluid that you need to, if you're not finding the answers, you need to ask. But if you're not finding it, it might be that the answers don't exist, but then get on the radar of, what questions you need answers to as soon as those answers are released. So with that, we'll take questions if there are any.
Yeah, I'm just going to remind everybody that the chat function on Zoom is down on the black bar at the bottom of your screen. You can address your question to all panelists and we will take them as they come in. There were a couple that kind of occurred to me as you were doing your presentation, Nikki, and you were just talking about it a little bit. I know we've been getting a lot of questions from, particularly from business owners who have businesses that are virtually shut down now. And you kind of just touched on it, but are you better off, if you haven't gotten your PPP loan yet, are you better off delaying that in order to be able to take advantage of it more once you are back up and running?
That's a really good question, Lee, and that's one that I've gotten a lot since the program came out, and I'm still getting that question. In reality, it kind of goes into how much you want to gamble. So yes, does it make sense if you're completely shut down or significantly shut down, and you want to extend that 8-week period to include as much time when you're open as you possibly can? Then it does make sense from a calculation standpoint to push it off as long as you can. But what we saw is people pushed it off maybe just a little bit too long last time, and the funds ran out. So now the concern is if you push it again, then will you miss it out? Will you miss out? So we're maybe going to be on the potential second set of funding. Hopefully some of the big large loans, hopefully most of the big large loans have already got funded. So that'll leave more opportunity for the self-employed and the smaller businesses to get their loans. But it's really a betting game. And you don't want to wait too long because you don't want to miss out.
Right, it is a gamble. So a couple of questions have come in. Let me read these out to you. One question is, we've been able to defer our last 2 payrolls until our PPP was funded. Wondering if deferred payrolls from previous weeks can be forgiven.
Yeah, that's another great question, Lee, and that's one that I'm getting on a daily or hourly basis. Is does it go by pay date? So if it goes by pay date, well then your goes by when you're actually making that payroll, when that's coming out of your bank account. Or does it go by pay period? And if it goes by pay period, then it would be 8 weeks from when your loan is funded forward, not necessarily based on when it's paid out. So we're really looking for guidance from the SBA on, and that's one of those questions that I think a lot of people are really desiring an answer for. And we need more clarification from the SBA in order to answer that.
Okay, thank you. Another question that came in was, should mortgage interest have been included in the PPP application calculation? I never saw mention of that in the application documents, but do see that mentioned in the deck on using proceeds to pay mortgage interest.
Yeah, that's a great question, Lee. So the application for the PPP funds, so when you get to how much are you going to get, so you calculated your average payroll amount, and then you multiplied it by 2.5. So the reason why you multiplied it by 2.5 is because we know it can cover 2 weeks worth of that payroll, plus there's another 25% that can be used for the mortgage interest, utilities, rent. So that's already factored into that calculation. So you didn't need to increase or have any specific calculation for that amount, but right below that on the application, it did say what are your uses for those funds, and there were some check boxes in mortgage interest and utilities and rent were within there. So if it was all based on what your payroll is, because this is really focused on the payroll side of it, but those are approved uses and potential forgiveness of the funds.
Okay, so, and Nikki, I'm going to ask you some kind of more general questions about what you're seeing out there, knowing that you have so many clients in this industry. Talk to us a little bit about business interruption insurance or the claims on that. There's been a lot of talk about whether or not insurance companies are going to pay up on this. Have you had any experience with kind of companies going through this and exploring this?
Yeah, I certainly have, and it's 100% based on your policy. And this is such a unique situation, this pandemic is, that what I'm finding is, there might be a little amount that businesses are getting, but they're not getting anywhere near like a business, what the actual disruption to their business is. But I would highly recommend reaching out to your insurance agent just to make sure that there's no funds there that would help you get through this. So a little bit of success based on policies, but not the volume or the quantity of funds that really are needed to get through this.
Okay. Is insurance considered part of the 75% payroll expense or 25% of the other acceptable expense?
So health
I don't know if the
insurance.
question is health
Okay.
insurance or what type.
Let's
I'm sorry.
go with health insurance because that would be an allowable expense and it's part of the 75%. So that's part of our payroll costs, including, and it also includes retirement as well. So that's part of the 75%. The 25% are rents, utilities, mortgage interest.
Yeah, and this is going to be, this might be more, I'll ask you to make some educated guesses here, Nikki, but somebody asks, what are your thoughts on the 8 weeks getting extended for the forgiveness period?
Yeah, I really think that it's going to depend somewhat on what happens within the next 4 weeks. What happens within the next 6 weeks. So we see across the United States, some states are starting to loosen their restrictions now. So I think it's really, time's going to tell us if our numbers continue to increase and we have to stay, safer at home like orders continue. I don't know if the 8-week period is going to extend because that's really going to mess with our calculations that we made. And the amount of the loans that we got, but would there be another program? Maybe there would be some sort of extension to the 8-week period, but I don't think it will be that great because in reality, businesses just got enough for that 8-week period.
Right. Okay. So you mentioned earlier some pork producers shutting down. I know from talking to a lot of business owners over the last few weeks, even those that aren't necessarily feeling the effects now, their expectation is that there are going to be effects throughout their supply chain. Can you talk about what companies in the hospitality industry should be doing to maybe identify secondary supply chain options?
Yeah, so you always want to have multiple options, but as we see it, like even with our protective equipment right now, if you just can't get it, you just can't get it. So what that means is we're going to need to alter our businesses. So let's say we can't get ingredients that we need for our dishes. Well, then we're going to need to take those off the menu and put on new items that we can get. And I have a lot of clients now that are looking at, hey, I'm going to come out, once we come out in this period where there's a lot of gray area, we don't know what it's going to look like, I'm going to come out with a special small menu. That way I can really control, I need less ingredients versus my whole menu, and I can really control that. So it's really being unique coming out of this as to what that looks like.
Okay. Another question that came in was, can payments to contract labor employees be included in the payroll forgiveness?
That answer is no. So our 1099 employees cannot, because our 1099 contractors cannot, because they're considered self-employed. So then they, self-employed individuals, do their own PPP application. So they take that 1099 amount and they can do their own application.
Okay. You talked a little bit about the economy opening up slowly, and obviously companies in the hospitality industry are probably going to be feeling these effects for the longest period of time. Can you talk a little bit about maybe the cash flow planning around a restaurant that's open but can't be fully open, or maybe how to do some of that?
Yeah, so really have to do it weekly. So what I've had a lot of clients that at first were open for takeout 7 days a week, and they realized, hey, my Monday, my Tuesday are really slow, and I'm actually losing money on those days. So you see a lot of restaurants being really fluid about when they're open, their hours that they're open, and that's all to really combat, what this looks like. So it's just constantly changing it up as you go, as you're learning what works, what doesn't work, then modify your business operations.
Okay, a couple more questions came in. I'd ask if any of you have additional questions, please send them in now as we're running short on time. So one question is, bonus and raises for my employees and myself are forgivable. Is that correct?
That's a really good question that I wouldn't necessarily feel comfortable saying yes. I think you should wait till there's more guidance from the SBA on what that forgiveness looks like. So they have told us we can't pay our employees less than 75% of what they were making before, but they didn't necessarily say what happens if I pay people more than what they were making. And I would hate for people to make big raises and big bonuses, and then the SBA come out with guidance that says, hey, that's not part of this forgiveness, and then maybe you wouldn't have done that as a business before. So I would recommend waiting until the SBA issues additional guidance on that.
Okay, good. Will putting employees back on payroll that did not collect unemployment count towards your total number for forgiveness purposes?
Yes. Yep. So even your employees that you didn't lay off, that they were working, will still qualify for the forgiveness calculation. So absolutely, there's no requirement that they went on unemployment in order to get this forgiven. The intent is actually to keep people off of unemployment. So even if you were operating and employees continue to work, that's still part of the calculation.
Okay, I think we're going to wrap up there. Oh, hold on, just one person got in just under the wire. So the question is, so we can pay employees less, and can this be spread out or still only within 8 weeks?
So you can pay employees less, so that they've issued very specific guidance on how much less that you can pay them. And then we know we have to get, for the loan forgiveness calculation, we know that we have to get to a certain FTE level, but nowhere does it say that we know we have to get to a certain FTE level. So we'll see what the forgiveness calculation looks like, if there's a reason why we would have to get back to the same pay amount.
Okay, so let's see. All right, so one last question. Sorry. EIDL loans were supposed to be available with a $10,000 grant. Are they going to open up more loans?
As of right now, they're really looking at potentially offering more PPP funds, but we know that they're constantly working on new bills right now. So you know, what's going to end up being in those bills, potentially, but there's no new big ones. I think the biggest one would be refunding the PPP funds.
Okay, and then I think I missed half of a question before. There was another question about, can we change employees from hourly to salary without any issues?
I don't know. I don't know the answer to that question.
Okay. We can look into that, Amy, and see if we can get you an answer on that. I am going to wrap up here. I want to thank everybody for joining us today and let you know that we have created a resource page where the recording of this webinar will be located, as well as additional information and updates on COVID-19. So please bookmark svaccountants.com/COVID-19 as a resource for you and your business. We do have plans for additional webinars, but instead of kind of planning them out a week or two ahead of time and then having everything change because news changes on an hourly basis, much less daily, our plan is actually just to schedule them as information changes. So it'll happen quick, but please stay tuned because we're going to continue to stay as on top of this as we can. I would like to just remind you all that SVA is only a phone call away. If you're a client, please reach out to your SVA professional as questions arise. If you're not an SVA client, please contact me, Lee Schwartz, so I can understand how we can help. And I would be happy to connect you to the right SVA professional and get you an answer to your question. Again, thank you all for joining us today, and please stay safe.